What's going on, everybody? Welcome back to my YouTube channel. So for today's lesson, I'm just going to talk about a very common scenario that a lot of traders find themselves in when they miss a trade. Now, the whole point in this lesson is just to illustrate what you really should be doing as a trader in terms of being patient and following your plan. Let's roll the intro. So we're going to take a look at Euro Yen on the 15-minute time frame, and I'm using the 15-minute time frame again as this is a time frame that I find is a very good balance for entries as opposed to not being too fast and not too slow. So looking at the structure of this market, we would analyze from previous days that the market structure was pushing to the upside. So just imagine on the hourly 4-hourly chart from your higher time frame analysis, this market structure has been pushing up for a long period of time. What we can identify here in this market structure is prices created a high, and once creating this high has attempted to break it on 2 occasions but failed. Now, price does not enter a downtrend until price illustrates strong bearish pressure or a change in structure. Now, we can clearly see the break of this structure is illustrating a bearish sentiment. Now, this does not mean that we're selling now. What we need the market to do is pull back to create a lower high formation and then continue this illustration or this structure build and make that lower low. Once price has done that, we can safely say that we're now in a downtrend and we can look to draw in our key levels for where we want price to come back to look for those selling opportunities. Now we can clearly see here price has come back to this level. Now I just want to build this story up. You've been sitting down now for the last 2 or 3 hours waiting for price to create this lower low to confirm this downtrend. You see price start to pull back and you're waiting and waiting. Now in the back of your mind, you're not planning to take a trade until price comes back to this key level. But as price comes back to this key level, something happens. You have to jump up from your desk, you have to pop your phone back in your pocket because you're at work, or you just totally forget that you're waiting for price to come back here because you got distracted with something else. You come back to the charts 15-20 minutes later and price starts to illustrate a signal for a sell. But you hesitate because now you're not concentrated, or you've lost concentration, should I say, and you decide not to take the trade. You'll be like, well, just let me wait for one more candle or one more wick rejection, and you just put your phone in your pocket again and you come back in 15 minutes time, and then when you come back, what happens? Price pushes in your direction, and by the time price pushes down, it's too late for you to take this trade. And now you start to kick yourself and you get super frustrated. You know if you enter late, it goes against your rules. And you know if you decide to jump into this trade and cheat the market, there's a high chance that price is going to take you out. So you remain disciplined and you stay away from the trade. It's only, let's say, maybe 2 or 3 hours later, just work with me here, 2 or 3 hours later, until you see that price hit that take profit or would-be take profit, do you start to allow those emotions to step in and start to control you. You've been waiting patiently, but now you can't get over the fact that you could have been 3% up, and this was the best setup for today's session. So what do? Well, you tell yourself you're going to remain patient and you're going to wait for price to build up and give you a really good signal for an entry, maybe a nice double top, a lower high formation, or something along those lines. But guess what you do? You just can't hold yourself. And you sit there and you stare at the charts for ages. And you start to build stories in your head. Now, traders are the biggest storytellers, unfortunately. Unless you have a very systematic plan and you follow it to the T, then you will be a storyteller. And what you start to do is you start to say, well, the market is making lower lows, lower highs, lower lows, lower highs. And the first thing you do, the minute you see a strong bearish candle pushing to the downside, is you say it's time to jump into this trade. But now all you're reasoning on, or how you're reasoning, is, well, look, I'll take this trade. I know my stop loss is big. Well, in this instance, let me just go for a 1 to 2. Even if I take 2% from the market today, I'll still be happy. But your trading rules say 1 to 3. says no stop loss above 20 pips or no stop loss above 15 pips, but look what you're doing. You allow the emotions throughout the course of the next couple of hours to take over and start to fester. And what that does is it misleads you to take trades you shouldn't be taking. So you go into this trade, and this is trade number 1 for the day. And this is a trade you know you shouldn't really be taking, but you reason that it was worth the take because you can see it's reacting as a potential lower high formation in this downtrend. And what happens? You lose this trade. Now by this stage, guess what? It's game over. For the majority of traders that trade against their plan and don't remain patient or disciplined, it's game over. Because what happens now is a ripple effect. The emotions that you had after not taking this trade, then being stirred up by taking a trade you really shouldn't have been taken, but maybe should have taken, and losing it and being 1% down is going to cause havoc. And now the blinkers are off. You will literally sit there for as long as you need to sit there until you can get yourself into another trade. No matter what happens, anything that resembles what you believe to be a downtrend or part of this downtrend, you are going to take as a trade. And a trader, or for some traders, they'll be jumping into this trade and they'll be like, well, look, it is a downtrend. Yeah, price is broken above this structure, but guess what? Now's a true lower high. Because look, there's a key level and a reaction to that key level. So I think now is the time to sell this market structure. You see how you're becoming a storyteller? You're making up things that are not there. The blinkers are off. So you take this trade, and then what happens? Eventually, you will get stopped out. Now, does it end here? Well, for the majority, no. You're not now down 1%, you're down 2%. But in theory, you could have been up 3%, but you've missed the best trade because you got distracted or you hesitated or you just allowed fear to take over. So what do? You continue to sit here for the rest of the session, and all you do is continue to fight against the market. There's no clarity anymore. It's over. It's finished. You're now in a situation where there's no point. There's no return or point of return, whatever the saying is. There's just no return from those 2 losses unless you can win one trade to put you up 1% or at least give you back the 3% that you thought you could have had in the beginning. Well, it's not even get back, is it? Make the 3%. Now, are you trading like a true disciplined trader who's systematic and patient, or are you adopting a gambling attitude? Well, it's not for me to decide, but it's for me to raise your attention to it. So think about it as you move forward. But now you start calling tops. You're not satisfied that this market structure has changed, that price is broken above the lower high or what seemed to be the lower high. It's now creating higher highs and higher lows, higher highs. The structure of this market is resembling an uptrend. In theory, no trade should be taken as a sell while the market is pushing up, but you continue to take sells. Now look at this. By this stage, you're probably feeling absolutely elated. You're saying to yourself, oh yes, it's going to go down now. I've caught the top and it's going to exhaust all the way back down. And then guess what happens? I mean, what can you say? But what can you say, guys and ladies? Like, it's just a really, really bad situation to put yourself in. What could have been a plus 3% day is now down a minus 3%, and it's totally it's game over. Most people can't recover from this. Even if you have 3 trades a day rule, most traders cannot recover from this. Why? Well, because you know every single trade you've taken after you never took this one was a very bad trade. You should have never taken a trade with a 1 to 2 risk reward ratio. It should have been 1 to 3, and it should never have been a 20 pip stop loss. It should have been 15 or below. You took a sell whilst price is illustrating that it's broken above a structure and creating higher highs and higher lows. You then went in for a sell again when price is illustrating to you that it's continuing to push to the upside, creating an uptrend and a formation of higher highs and higher lows. Now, if you were a patient and disciplined trader who was very systematic in his approach and was aware that missing a trade means nothing, in theory you can never miss a trade. all that can happen in a situation where you don't take a trade is that you've never took the trade. That's it. Because you can trade tomorrow, you can trade next week, you can trade next month. And if your plans are to be a full-time trader, then what's the rush? Great analysis. Well done, George. That was brilliant. You recognized where price could come back to, the reaction happened, and it hit take profit. No, you didn't take the trade, but the process of you planning that trade worked out. So guess what, George? Well done. But no, guess what happens? Mr. Einstein over here decides to take a trade that you know you shouldn't be taking, sell in a trade that's illustrating in an up or illustrating and create structure to the upside, and then over here just randomly trying to catch the tops. Now, I've been here before, believe me, and there are times that I may go for it once or twice a month. It happens, I get it. But I'm telling you now, for those that do it on a consistent basis, you will never be profitable and you will never be consistent. Now, for most traders, or for the minority of traders, should I say, those that can identify that they never took this trade, not missed it, and waits patiently for the market to either create clean structure to the downside, illustrated by lower lows and lower highs, or to wait for price to come back to a key level, will be the only ones that would have avoided these free losses and being down minus 3%, and would have waited for price to come back to this key level where it's created a level, reacted, and now responded. And you take this trade as a patient and disciplined trader, following your plans with a very reasonable stop loss, a very nice target of 1 to 3, and then executing a plan, or should I say executing the trade according to their plan. And if this is not gorgeous, then what is? So I hope this has raised your awareness to a common behavioral pattern that a lot of traders face. If this is you, stop it. Because right now you could be sitting plus 3%. But unfortunately, you're only sitting at break even. Yes, break even is a good way to end the day. In my opinion, it's a win. But it could have been a lot worse. I hope you enjoyed this video. And if you did, please smash that like button, subscribe, turn on notifications, and until next time, take care.